You have your car insurance document in front of you, and then when you go to make a claim, it just disappears. You have no cover whatsoever. Your policy has been declared null and void. This video is going to just explain some of the situations and circumstances that can result in your insurer completely refusing cover. And it leaves you in a very difficult situation, because not only have you been driving without insurance, you could also be in line for prosecution for insurance fraud, and that can also result in you having to pay out personally for any damage that has been caused in the accident. The sort of things that insurance companies need to know about, and if we don't tell them or we misinform them, we're just asking for the policy cover to be cancelled or withdrawn when we need it the most. We're also going to talk about fronting, and this is what we're going to focus on first, because it's a big issue. A lot of people don't realise the implications of fronting insurance, and some people don't even really know what it is. Maybe they're doing it innocently without taking into account all of the complexities of insurance and the way it works, and finding they don't have sufficient insurance cover when they need it. Fronting on an insurance policy is a situation where someone who is more experienced, has more no claims discount, takes out a policy and they add a less experienced, higher risk driver as the named driver. Now, there's nothing wrong in doing that generally. A lot of parents will add their children to the policy so the children can use the car maybe in the evenings or maybe at the weekends occasionally. The problem comes when that young, inexperienced driver is the main driver. This is usually determined by the way they use the car. If they're using the car for commuting to work, for example, they would automatically be considered the main driver of that car. And most insurance policies will only cover a mature main driver and mature named drivers, husband and wife, for example, for commuting to a permanent place of work. And younger, less experienced named drivers will generally have commuting excluded from that policy. It really is only intended for that young, inexperienced driver to have occasional use of the car. And if it turned out the circumstance of the accident pointed to them being more than occasional user, you can find yourself without insurance cover and having to pay that claim out yourself. Other clauses are the use of the car. Here in the UK, we basically have a few different levels of use of our car. We have social, domestic and pleasure. That is just for, as it says, using the car domestically, taking the kids to school, going to the shops, visiting friends. The next level up includes commuting, and to be honest, most policies sold in the UK are social, domestic and pleasure, including commuting. Now, commuting is often only to one permanent place of work. If we work at multiple locations during the day, or there are multiple offices we're travelling around, commuting is often not sufficient to cover that. We would then need Class 1 use or business use, which is allowing us to use the car in connection with our occupation or our employer's occupation. And that would include travelling to multiple places of work or multiple destinations for work purposes. That, however, would not include the carriage of passengers for reward. If you're making a profit carrying passengers like you would if you were an Uber driver or a taxi driver, that is not covered under that form of business use. And if we're carrying packages for delivery, again, that is not covered under that Class 1 business use. We would then need to go to Class 2 business use, which includes this element of hire and reward, allowing us to carry passengers or packages for payment. We see a lot of takeaway drivers falling foul of this, thinking they're covered for the job they're doing, and actually they're not. And very often it's a gig economy. They're taking any work that crops up, and they've often just moved into the fast food delivery because there was an opening at their local place. And when they have an accident, the insurance company find out that they were delivering food for this takeaway place, they're going to be hit with no cover, and they're going to have very serious problems to deal with. They're going to be in a very dire situation without car insurance cover, having to pay the claim themselves and repair the damage to their vehicle themselves as well. We also, at renewal or when we take a policy out, need to declare any accidents or losses, whether covered by insurance or not. Often when you sign up for a policy, the wording is rather vague on the application form, and then when you fill in a claim form, it gets very, very specific. The insurance company need to know if you have been involved in any kind of loss, and technically a bird flying into the window and breaking it is a loss you may not even have claimed on your car insurance, but that is a loss that they need to know about. And if we've not disclosed all of these losses or all of these incidents, assuming that because an insurance company didn't deal with them, we don't need to notify the insurance company, that really is a great trap for them to use at claim time. As soon as we see the claim form and it's asking very specific questions about losses not covered by insurance, whether we claimed or not, we might answer that in a different way to how we answered when we took the policy out. The only way around this really is to just be ultra careful when we're filling in that proposal for car insurance at the outset. Another principle of car insurance is taking reasonable steps to prevent the loss from happening. And often if a car is stolen and the keys are inside the car, or you've left the car with the engine running and someone's been able to steal it, you can't expect cover. That's specifically excluded in your policy wording. With anything though, you've got to take reasonable precautions to prevent a loss from happening. And if the insurance company decided there was a big aspect of negligence on their part, that could give them a basis for refusing to pay out on your claim. And this leads us also into the situation of mitigating our losses. So if an insurance company feel that our losses have been blown out of all proportion, they'll refuse to pay it. And classic example really is our car's off the road, we're claiming for a hire car for a period of 2 weeks, we've gone for a limousine instead of something comparable in size, so straight away we're in a situation where we're trying to improve what we had originally, which was not what the insurance company's intentions are in terms of their policy and their policy wording. And they could refuse to pay all of that claim or just pay a proportion of what they felt was reasonable. But I've known situations as well where people have claimed hire cars for a couple of weeks. They've only done 50 or 60 miles in those couple of weeks, which is probably normal for them. It would have been much cheaper to go out and get a taxi or use other means of transport for that short mileage. And again, the insurance company can come back to you on this "you haven't mitigated your losses" clause and refuse to pay out for that aspect of the claim. Your best defense then is to know your policy, notify the insurer, keep a record of these notifications through the year. If we've sent an email to them, make sure that email is printed out and we've got a hard copy somewhere. If we do it by post, again, make sure we've got a copy of the letter that we sent to the insurer notifying them of what's been done. And don't get caught out. Understand that when we fill in the application for insurance, the questions are often more detailed when we come to make a claim. Find out what the true implications are of the question. We're not going to do ourselves any favour by underrepresenting the risk to the insurers. If we've changed the alloy wheels, if there's a modification to the car, if we've adapted it, if our class of use is slightly out of the ordinary, if we've got a high risk occupation and we're trying to hide that by lying, saying that we're in a different occupation, as soon as we make a claim, this is all going to come to light and we just find ourselves in that situation without insurance. If an insurance policy is declared void, that can have implications on future policies that we take out because we've technically been refused insurance. And that is a big red flag when it comes to taking out a policy. And we can find ourselves in a situation where only a few high-risk insurers are prepared to offer us a quotation just because our insurance has been declared invalid or there's some note of fraud with insurance companies on our record due to a misrepresentation of one of these facts. Another point to note on the general condition and roadworthiness of the vehicle is that we should only drive the vehicle if it is safe to do so. If, for example, it's just been in for an MOT and it had a major failure and that failure was a contributing factor to the accident, the insurance company won't pay out, and they'd be quite justified in doing so because we took an undue risk driving a vehicle on the road that was unsafe to do so. And in the event of a claim, we do need to prove to some extent that the vehicle was in good condition and it was roadworthy, and that doesn't necessarily mean that it has a valid MOT because the condition of the vehicle can deteriorate quite quickly after an MOT is carried out. For example, if the accident occurred due to road rage, i.e. we deliberately drove into another vehicle or we deliberately caused an accident, again, the insurance company could well refuse to pay out on our behalf because it was something we did that was malicious. So the other driver would be quite entitled to bring a civil case against us personally for the damage that was done to the vehicle. And that just really shows the importance of keeping our cool while driving, not allowing the red mist to descend and getting wound up to the point we start getting involved in road rage type incidents with the vehicle. Checking your insurance policy details at renewal is a good policy to have, because things change. Maybe the annual mileage we do has altered over the last 12 months. Maybe we've got a new job, and it really is important to just make sure that the insurer is aware of these at the renewal date. They'll ask us to check the details carefully, and they're really looking for us to notify them of any significant changes to the risk that they are taking on, and failure to do so can lead to refusal to pay a claim at some point over the next 12-month period. Now, some things that happen during the year, we should really notify the insurer as it happens, but there's often a little bit more leeway at mid-term when things change, but it depends on the item. If we change our car, or there's a significant change to the car itself, that becomes instantly notifiable. If our job description has slightly changed, some insurers are happy to wait until renewal date, as long as we're not in a high-risk occupational bracket. Thanks for watching this video. Please boot the like button if you found this useful. If you're not subscribed to the channel, please do so. A lot of you aren't, and you'll be missing out on all this great content we've got planned. So have a look at these videos as well that I've lined up for you. Thanks for watching. See you in these next videos.